What up, investors? Ken here from Dyslexic Investor, and today we're going to be looking at, is it time to buy, sell, or hold, or add more to your position within Facebook? So currently, full transparency, I own quite a few shares, 20 some odd shares, I believe, in Facebook currently, and potentially looking to add more. So the quarter was not great. Guiding, you can see this is on a daily chart. It ran up quite a bit to the quarter. Once it reported, opened down pretty sharply due to running expenses and the overall cost of basically having to run the business and different various assets of that, and then people kind of misleading with the elections coming up and kind of being a little bit emotional about things. But that being said, I don't really pay attention too heavily on the fundamental stuff. I look at the charts. That's my specialty. I like to look at the charts, technically here, and trying to gauge on if I should add or buy more. So there's a couple articles I wanted to share with you today. So this is from the Investor Place, and this is actually 2 days old, but it still has the same sentiment. Again, both these articles will be linked in the description below for details. So basically, they're saying that there could be potential lower term or lower prices in the lower term within the Facebook stock. We'll be looking at how I dictate the charts here in a second. So they're looking at, it was a fake breakout into earnings, and it failed. It came back down, and then potentially can kind of come up to like a dead cat back, like it's usually a 25 to 50% retracement from the original high, and then come crashing down to all new term lows. And that's basically how people see it, on saying the downside target is 200 to the 190s. That's totally fine. That's great. This is also some news that came out after the earnings report that the Pivotal Research Group analyst Michael Livlin downgraded the stock to sell from hold and lower the price targets from 180 to 180 from 215. And his quotes: "We think that the street is being way too complacent regarding the impact of Google Chrome changes made on February 4th, where it's Chrome's 600, in fact, that we restrict some of the capabilities of third-party cookies." I don't think other people quite understand that the part of how Facebook makes money. They run the ads, but the thing is, I think they're kind of missing the fact here. Facebook, the site, is not the play. It's going to be Instagram. It's going to be Instagram is the biggest driver for Facebook. So that's my bull thesis. So let's go ahead and look at some prices here. As we talked about, it ran up to earnings, kind of came back down, kind of put a alert down here just to notify me if it breaks below this low, because that's going to be key. But you can kind of see here, we'll just be drawing a couple little trend lines here. It is going up in a nice fashion. So what we talked about is that 50% retracement. So that being said, so from this high to this low, they're thinking, here's the 50% retracement line here. So we can hide all of this. There we go. Hide that. Hide that. We can leave that there. So this is the 50% retracement. So it kind of came up here, 50% retracement, came back down, but it held, and it's the higher lows here. So that's a good sign moving forward. Just looking at the ticks, or and then looking at the moving averages, they've flattened out. Again, everyone knows I love the 21 exponential moving average, and that's the yellow line here, and it's kind of steady. The 8 kind of went through it, which is bearish, but there has to be other indicators alongside of that to prove that. It's not just one single indicator will tell you where the stock's going. It has to be a conglomerate. It has to be multiple indicators to identify a change in trend or change in pattern. That being said, it kind of crossed here, but it leveled off pretty fast. So we had a pretty big down day with a lot of volume. Again, you see the blue bars in the back. But a lot of the volume came in the day after earnings. So you can kind of see here Of course, most of the volume is before or during earnings. So, but Facebook isn't quite is in the news quite a bit. So, depending on what articles can come out, it looks like it potentially could be up or down from there. That being said, the 8 is curving back up and coming to cross over the 21. So once it crosses over the 21 and it starts breaking above and staying above this line, actually, let's go back here. We're going to edit this. I want the 618, and let's put these back actually. So once it breaks above like 215, which that analyst Michael said that he's lowering it, it's kind of it's so analysts. I understand with their job, but they don't put it into perspective of like, what do you mean it's going to be at 180? Is it going to be 180 in a week? Is it going to be in 180 from a week, a month, a year from now? Like, there's no timeline. They just put out numbers. Again, they have their own models and projections, but there's no. They're not telling the whole story from my belief. And so once it breaks above 215 or even kind of trades up, but I want it to continue to move, it can trade sideways. Like trading sideways is not too terrifying for me. So if we can trade sideways around the 215 and going higher, that would be fantastic. So let's go ahead and look at, again, this is the daily chart. Like I said, the stocks that break the 3 deviation here, which is that dotted red line, it usually snaps back to the version of the mean. That's a great sign there. That's healthy. That means it needs to get back on track, potentially trading more sideways. So let's go ahead and look at this here. Again, this is on a daily chart too. The trend was slightly down due just a couple days ago when that report came out, which is totally okie dokie, but it's already reversing. Again, with Facebook, a lot of people are just, they trade Facebook a lot. They don't invest in it like myself, that people need to look at the longer term of things. You see that this is the 9 and this is the 21 here, and that kind of represents what we looked at before, but this is just more a detailed thing. So once this green dotted line goes above the white dotted line again, we potentially could have a break to the new highs. So that being said, the volume is very light. I would like for this tick to go higher. I would need it to be like a trend change. Normally, it would be a little bit higher average, so it would be above this little line here. Looking at a weekly chart, there's actually a monthly chart. So like, just look at the impact of what Facebook was. So this is like 2012. It was $17, and now it's $224. No more than a month ago. But it's been, this is the crazy part of a trend. So if it ever gets down to like, they're saying 190-ish, this level here, this could be quite significant lower. But let's go on a weekly chart. The trend's still intact. Like, it's not below the 21. It hasn't been below the 21 for not until like, yeah, it kind of traded blah during the summertime, which a lot of stocks did, but then kind of came back to life in October. Again, had earnings, really sold off quite a bit, but then literally rebounded and making changes and particularly moving higher. The only thing I would be a big worry wart is when it breaks 200. Is it likely? Anything can happen in the stock market, but that being said, is it going to likely hit 225 or 200? I'm putting my money on it's going to be hitting 225 more before it hits 200 at this point in time. Let's go to the daily chart here. You kind of see here, I love that this little pattern is. So once this crosses over, you're going to see a potential algorithmic buy-in for a lot of algos and potentially push the stock substantially higher. Looking at my overall price target, in the short term, I would say around 235. So I think hitting at 235 within the next couple months, just because on looking at the overall trend. But this again is not tied to an overall market correction. Then it's going to be dragged down. But that's just going to create a buying opportunity for myself to buy. And I have my first alert at 200. Will I be buying at 200? Maybe, but if you see big red candles like this on a down day, I normally want to buy the day after, because this usually if it's a big red candle and it gaps down, it could potentially gap down more. This is not a good representation. Let's go on a weekly chart, like right here. But this was due to earnings, so that's different. So if it's usually after earnings, you see like red candles like this, I normally want to wait. This is not during earnings. I want to wait. I want to have these wicks. So if you look at a candle in detail, so this is a very heavy sell candle. This is a very heavy sell candle, and you can honestly feel the weight of all the red towards the bottom of the candle, meaning it wants to go lower. You see that here as well. You see that here as well. You kind of see some capitulation here, capitulation, kind of some capitulation, but again, that there's a lot of naked candle up here. That's still not a true indicator if it's ready to rally. And you still see the 8 and 21 still pointing down, so there's no reason to buy yet. On this over here, the 8 and 21 are still pointing to the North Star, which is profits for the long run, for the bulls, for the bull case that is. It's going to be very difficult to sell this. So going back to the whole candle situation, so you can kind of see like these super long naked candles, and they're red. So what that means is that this is an indicator of like, holy moly, guacamole. We went all the way down here to 160 and then back up to 175 in that week, and there's a lot of people who bought in most likely here or sold out. They just changed from hands that couldn't hold, and then it went to someone else that had a more longer term view on it or trading opportunity. Because a lot of people, when it's down multiple days, that's why a lot of people say don't buy a stock 2 or 3 days after it's a huge tick down, due to the fact that it can potentially go down even further. So these huge indicators like this is a good sign of a potential bottom. So again, I'm not calling a potential bottom here. Again, anything can happen in the stock market. I want to be very clear with that. Like, I don't have the crystal ball yet to know the markets. But this is a huge kind of candle, and it's one of the bigger ones in the last coming weeks for potential gains higher. So I can easily see touching all-time highs rather than touching 200. Again, those are just my takes from Ken, the Dyslexic Investor. Again, guys, thank you so much for watching. If you want to see more content like this, please leave a like in the comments, or like on the video in the comments down below. I greatly appreciate it. Again, guys, take it easy. Peace.